What is up, fellas? What is going on? So I'm just gonna hop right in. Hopefully I did this right. I messed up the first time I recorded this, so this is actually take two of everything because I messed up. So but let me just dive right in. Why I think that this is important information and why I think that this is the Bitcoin top. I guess let me give an introductory statement. Let me give the 5 points I believe in, and I'll give a conclusive statement real quick. Hopefully I can do this in, roughly 15 minutes or so. All right, so let me just turn this mic gain up. Fellas, so if we want to think about the crypto market, we know how linear it is to Bitcoin. We know how much everything just follows the BTC, everything follows it more or less, and, there might be spikes after things like this. It's all somewhat relative in the moment, but more or less, we know that the bull run and all these spikes and these crazy pumps and all that stuff happens because of Bitcoin, or at least while Bitcoin is going through its pump and its spike and its whole thing. So I'm going to be just referencing predominantly Bitcoin on this because I think that's the main indication or the main, tool that we have at our disposal, right? That's why all these things are called altcoins, because Bitcoin is the main coin. So let's just dive right in. First of all, we have, sorry, I just turned down the mic gain. So like I said, I'm going to have 5 reasons to why I think that this is a true statement or something to take into consideration when investing. Right now we have a pi cycle top indicator. This is a 350-day with the 2x multiple moving average with the 111-day moving average. Every time that these two lines cross, that's what these two, so this is the Bitcoin price, as you can see, the darker line, and then we have this green and orange line. The green line is the 350-day moving average, the orange line is the 111-day moving average. So every time that those lines cross, there's this thing called a pi cycle top indicator, which I think I've told Paul, probably 4 or 5 times now. He's probably heard me say it. He's probably a little annoyed at this point, but every time that these two lines cross, we have this pi cycle indicator, and as this website's laid out for us, this orange dotted line right here that goes above. And as we could see, there's always a consolidation period that happens after the pi cycle top is indicated. So if I had to just seeing that, if I had to guess what's the next market move, just after seeing the Bitcoin pi cycle top, well, what do you think is going to happen to Bitcoin's price next? I mean, I don't think it takes, I did study econ, but I don't think it takes an econ major to make that, professional speculation. Or call it I mean, this is non-financial financial advice. Do what you want with your money. Your money's your deal. But I'm just trying to provide this information to my boys, man, so we can all make strong trading moves and be rich as fuck, hopefully by December. So that's the first thing that I want to talk about is just trading windows. Like when these two lines close, are closer, these orange and green lines, this is not the time to be buying. Basically we want to buy roughly, when these lines are a little bit farther apart, not just in Bitcoin, the whole market. If we look at the cryptocurrency market cap, the whole market follows Bitcoin's price. This is the entire crypto market cap. It follows what Bitcoin does. Let me just slide that over here for now. So like I said, the better time to invest, in my opinion, and again, if you look at Litecoin, if you look at Chainlink, if you look at Ethereum, all these things, their prices also model roughly the market cap of the price, or of the entire crypto market cap, which makes sense. That's how these prices are kind of derived, is if a coin's market cap is at $40 billion, then it goes to $80 billion. Well, the price of the coin doubles, So a lot of these things add up and just kind of make relative sense. So that's kind of our first guesstimate on why, or that's the first tool. I want to break down the pi cycle indicator a little bit more, before I move on to the second point. The second point will be the Bitcoin dominance chart, but before I get to there, let's finish up more of the pi cycle top indicator. So every time that the pi cycle top is indicated, we have a peak. We have a peak price of roughly, this one was 64,000 right after, I think, roughly. And then what I've observed is after every pi cycle top, the next peak for Bitcoin is 90% high of what the pi cycle top was. So if we do the math, if you multiply zero point 0.9 times this, it's going to be roughly $17,000. You do it over here, again, same. It's like $1,000 or something. So yeah, we have $1,000 times 0.9, roughly $900, right? So, and where are we at now in today's market? If we multiply this number, $64,000 times 0.9, we have these peaks right here. We have these peaks. Again, another reason why I think we're at that's just observing just the pi cycle chart alone, just that alone. So zooming out, I know we're all kind of new to crypto too, and this is kind of a mistake on all of our parts if we think that this market isn't going to correct or have a massive correction like it has in the past. I don't think it's going to be as big because it's much more of a well-known asset class. But if you don't think a 60% correction is not within the realm of this sphere, then like, don't be foolish, in my opinion. So that's the first indicator, is the pi cycle top indicator. We just acknowledge that chart. Hey, we invest, or we should be investing, when this happens. Roughly, this is going to be when the Bitcoin halving is. That's the rule of thumb. Invest in the Bitcoin halving and, dollar cost average in whatever, the top 10 coins, if you're investing in Ethereum, all these things, you dollar cost average in, after the Bitcoin halving for like, let's say 100 days, but then you cash out, you walk away and start taking profits when these lines get a little closer. Like, it doesn't take, again, any sort of genius, none of that. This is just, let's just zoom out. When's the best time to invest? When these two moving averages are a little bit farther apart, and you cash out and sell when these moving averages are a little bit closer. Now, Bitcoin has a 4-year cycle. So even if I won't be investing after the next, if there is a second pi cycle top, I'll be shorting the market, like I've mentioned, because this is the trend after every pi cycle top. The reason why I think that this could be a little bit different and more of the 2013 market, if we go to the 2013 market, I wasn't in crypto at all during then, but if we just look at the pi cycle top then, it was signaled in April. It was also signaled in April here. And obviously we're in a very bullish environment, right? Or however you boys want to say it. There's the EIP thing coming out in July. There's the ADA thing coming out, I think, in August. There's, and obviously Coinbase is taking off. It's blowing up like crazy. There's all the meme coins, but the meme coins aren't helping the bearish case, or the bullish case, I'm sorry. But the point is, if best case scenario, we're in the 2013 market. Best case scenario. And that's best case scenario, but I'm not banking on that. I don't think that's the best thing to do, is just to bank on that right away, because again, it could be a foolish thing that we do and we won't see our money back, in my opinion, if you start investing now or invest around here. It's you're not going to, around these peaks, you're not going to see your money back for 3-4 years. And no disrespect, but I'm not trying to not see, especially when I'm up right now. I'm trying to walk away with my profits. I made $4,500 in 14 days after this point. From here to here, I made $4,500, $4,600 and $4,900 and $4,954. I'm sorry, but the point is I'm not trying to stick around for these pi cycle tops and see what happens. That's just not good investing. That's not a smart move. It's just not. So that's the first indicator, is the pi cycle top. Let's move on to the Bitcoin dominance chart. So this is the 2018 when Bitcoin dominance fell. Right here was 2018 of January. Well, Bitcoin's peak was actually it was 18th of December or 17th of December, sometime in then 2018 or 2017. And if we look at the Bitcoin dominance, it's obviously a lot less. Now, a lot of people in the altcoins, they'll say, oh my God, there's the biggest altcoin season, yada, yada, so on and so forth. But the reality is, altcoin seasons can only happen when there's a bull market. That's it. They don't exist in bear markets. In fact, you get fucked. You lose your money. Your shit drops like crazy. If you think a 40% dip is crazy, altcoins will literally take 80% dips, from my understanding. And just looking at their charts, it's that's what'll happen. At least Bitcoin and Ethereum are stronger asset classes, so they won't. But don't be foolish to think because and this is the biggest concerning part. Every fucking YouTuber, at least, except for the Benjamin Cohens and a few guys who analyze the charts, every YouTuber's like, oh, like everything's gonna go to the moon, and like we're still gonna 100x from here, and Bitcoin's gonna hit $3 million, and it's like, bro, like that's not what's gonna happen. Like it's just not. Like, I'm sorry, unless something massive happens to the economy outside of Bitcoin, but like the, dollar actually massively inflates, which I think it will, in the next 2 to 3 years, but I don't think it's going to happen tomorrow. I don't think it's going to happen in a month from now, but give it 4 or 5 years. I'm sure crypto will be massively much bigger. So again, I think long term, all of our investments are going to be fine, but in the short term, I'm just trying to make the most of my money. And I don't think that in the short term, this is going to be where I want to invest when the Bitcoin dominance is low. Because this, if you look, this is when you invest, right? When the Bitcoin halving happens and the Bitcoin dominance is high. You don't need to be a professional investor or nothing like that to just say, hey, like this is when I'm putting money in, right? But when we're here now and the Bitcoin dominance is low, what is it, 43%, 42%? This is what it was, at the last peak in 2018. So studying that, comparing that with our pi cycle top, it's like, okay, well, there's a second layer to why I'm a little bit bearish. Because again, we go back to this is when Bitcoin dominance was the highest, right around here, the lowest, January, 18th or so, or January 6th, I think was January 8th. So that's a little bit of another reason to be a little bit bearish about this entire market, because although we're seeing this massive Ethereum spike, which is actually going to be the next reason to why I think this is actually a top, don't be foolish to think that the market's just going to like take off from here. Like I hope it does. I hope I'm wrong, like I said, because, and I'll explain, an even bigger point at the end of all these 5 points to why I hope I'm wrong. But if we look at the Ethereum price, let's go to this. There's always an Ethereum spike, or at least if we look at the 2018 market, I shouldn't say always, there's not really enough data points to collect. But if we just look at the 2018 market, Ethereum has this massive spike after Bitcoin hit the pi cycle top. So there's a pi cycle top. This is Ethereum's price, by the way, which obviously you boys are familiar with, but so here was the pi cycle top right here in the 2018 market of Bitcoin. When Ethereum was, here, then it took a massive run after. The next month, it took a massive run. What are we witnessing now? There was the pi cycle top in April for Bitcoin, and we're at that second 90% peak. What you're going to see is eerily the same from the 2018 market. So boom, we have that happening here. And then we have that 90% peak. And what's happening to Ethereum's price right now? It's going through the absolute roof. Like it's going to the moon. Like you guys have been obviously talking about it and flexing it, but it's like, I don't think it's time to be buying more Ethereum. I really don't, because it's like, okay, if you buy Ethereum right here or here, it's like, okay, you're going to ride this peak down and you're not going to see your money back for another 4 years, 3 years, which is fine. You're still going to see your money back if you just hold, right? But like, I don't know how long you guys are trying to trade for, because the idea is you want to get in during the Bitcoin halving, get out at the pi cycle top is more or less the trading ideas. But again, let's just look at this this pi cycle top indicator. Gosh, I'm fucking econing out right now. Bringing back that econ major for sure. But okay, so we have the pi cycle top that happened December 17th, 2017, right? Go back to Ethereum's price. It did this thing, right? And then go a month after the pi cycle top, after Bitcoin's peak. What is this, January 6th? At the 90%, the second 90% peak. And Ethereum has that skyrocket thing. It's like, guys, like, if we're not witnessing a very same thing, then I'm going to be like super, super wrong. And I'm cool to be wrong. I'm so happy to be wrong, because it just means we're, probably in a 2013 market where, we're gonna see a second massive parabolic gain in the entire market, which it would be fire, because then we all touch at least 6 figures this year, hopefully, right? But I promise you, if there is a second parabolic gain, I'm telling you boys, I'm going to be shorting the second top. If there is a second top, if there is a second pi cycle top in this cycle, I will be 100%. Every dollar I make from then to now, I will be, or now to then, I will be shorting against the market there. But so that's the third reason, is the Ethereum price. We have the Bitcoin dominance, the pi cycle top, and then the Ethereum price. Or just that pattern. If Bitcoin hits a pi cycle top, then a month later, or 3 weeks later, Ethereum is this massive run after. Well, okay, we should probably take that into consideration of what's going on. And also use it for trading, as a trading information, for future markets. So when Bitcoin hits the pi cycle top, it's like, cool, like you could put everything into Ethereum and you'd feel good about that bet, or that investment. So that's kind of the third point. I do want to make a just like asterisk point right now. I know you boys were talking about, the short-term capital gains tax or the long-term, but unless you're holding beyond, because again, let's observe, if this is the 2013 market, if you boys didn't get in, until February, January, like myself, if we do have another pi cycle top in December, I'm going to be poking you guys like, get the fuck out, like, because this is going to be the beginning of a bear market for 2-3 years, and it's like, get the fuck out, take your money, get the fuck out. But that is still going to be within 10 to 11 months, depending on when you got in. So you're still going to have to pay short-term capital gains tax. So with that being said, I think it's still something to consider, is like, well, how far do you want to gamble your money just for, what is it, like a 15% difference on the tax rate, which is still significant, but it's like, don't gamble, all your profits. And if we're potentially at a top like this, well, you're going to lose I promise you, all your profits are going to go away. And this is semi-realistic case scenarios. We're here. I hope we're not. I hope we're here. I hope we're here in the 2013 market, where it's like we're still going to see a massive parabolic gain in the entire market, right? But who's to say? Like I said, I hope that's the case, because then we all touch 6 to 7 figures this fucking year. Like, that's going to happen. But the point is, if we're not, this is risky business. So I think the best move personally is to pull out and, or short the market even for 2 to 3 months. But it's like, if you come back in 2 to 3 months from now, and if we're modeling the 2013 market, this is when you come back in and buy. When Ethereum's a little bit lower, when Bitcoin's a little bit lower, when all the other coins are a little bit lower, and it kind of left the news and all that stuff, it's like, okay, you're coming back into the market here, and you're cashing out on all your gains from up here, or roughly so. And you're going to get that much more money by the time the next pi cycle top is indicated. However, if we are at the top of the market, and this is the top and beginning of the bear run or the bear market, if you come back in 2 to 3 months from now, that's going to be around here. In that case, you're going to see your money back a lot sooner. Let's say you get back in here in April, or 4 months from the top. I'm sorry. So what would that be? I don't know, maybe July or so, or July, maybe August. You're going to see your money back by here, which is going to be, 2 years, not horrible, but it's going to be a lot better than like if you keep your money in here and this is actually a top. Well, you're not going to see your money back for a very long time, up until roughly somewhere over here. And me personally, I'm not trying to do that with my money. I like to see my money grow and being used and being in a bank account. And it's still a good asset. Like, I'm not, absolutely trashing the crypto market. I still think 10 years from now, everything's going to erupt, because, it's a matter of time at this point. But you have to think from that type of perspective of like, how much do you want to optimize your money? And if you're just trying to avoid capital gains tax, or short-term capital gains tax, you're going to get fucked through the market, like through the bear market. That's a much bigger tax than what the Uncle Sam's going to be charging you. So that's kind of to round out the third point is of that Ethereum price. Let's go to the crypto market cap. I know this was kind of entangled with the first point, but again, it's just something to note. So we have, again, if we compare it to the pi cycle top and just Bitcoin prices and peaks in the 2018 market, this was Bitcoin's peak right here, was, however much this was, December 12th, and then, or December 12th, 2017 was like, Bitcoin's peak, or December 17th, however much it was. But a month after that, roughly, we have a massive influx because everybody's trying to get in the market. That's the most money that the crypto market had seen at that point in time, was a month later during the Ethereum run. What are we looking at in our market today? Here's where Bitcoin's top was. The pi cycle top was roughly around here. And then if we go to this point, what's happening now? We're having that Ethereum run, and there's more money in the market than ever. So it's like, again, I think that's kind of a fourth justification on why like being a little bearish is somewhat okay right now. Now, to be fair, we could also be like right here, which means, it's like, okay, you maybe don't want to get out then, because then, you're going to miss out on this massive gain. But if we're right here, then I'm fine with waiting for 2 months and then getting back in. That's fine. Or if this is a top and, you wait 2 months and you get back in somewhere over here, it's like, okay, fine. Like, you're going to see your money back a lot sooner, and you're going to have much more parabolic gains. I know it doesn't seem like much when you look at these tops. You're like, oh, well, if I just bought here and held for here, it's like, well, yeah, but if you get in at a lower price, like I promise you, the multiples are much higher. But anyway, the point is like just looking at this and observing the pattern with the pi cycle top and the Ethereum run. Well, this is another thing that makes me a little fucking bearish. So hopefully that's coming through to y'all in a digestible way. The fifth thing that I want to look at is this chart here. This is a website called Crypto Purview. You boys should definitely use this if you're not already, for good trading decisions. But if we look at the 5-year lines, the MACD line and the RSI is the relative strength index. The MACD is just another moving average, basically. And more or less, when you look at the MACD line in comparison with the RSI, you want to be selling when the RSI is high, and the MACD is the blue line. The orange line is the signal line. I think that's the moving average. And you want to be selling when the MACD is above the signal line. This is all good time to be taking profits right here. When the RSI is high and the MACD line is above, right? This is great time to take profits. This is just like econ. I mean, you look at stocks, it's the same thing, right? But the best time to be buying is when like the MACD and the RSI is lower. When the MACD is below the signal line and the RSI is low, these are great times to pick up some bags right here. Like, boom, you buy here, boom, buy here. And you could dump, like, you could bet the farm at that point. You could bet, like, because that's what I'm going to do. I'm going to do that, when you look at this grand scheme of things. And then one more important thing to notice, in this fifth point of the MACD line is, look at when this line crosses. Okay, so we see how it crossed right here when the MACD goes below the signal line. It did that in the 2018 market right here, right? There was that massive bear run for 2-3 years before you even saw a little bit of hope in the market. And again, I know we all believe in crypto and it's all like, we're all here for the long run, but it's like, I don't want to see my money just diminish. I don't want to see it. I'm not here for that. I don't want it. I don't like it. I'm not doing that, So I'm trying to play the smarter window game, which is like, I'm not going to risk this for what? For like a 5% gain, maybe a 10% gain comparatively for like this downside of however much it could dip to like, $30,000 a coin or something. Who knows? But like, I mean, that's worst case scenario. That's if this is a bear top, but altogether seeing this MACD pattern, it's like, man, like, why would I not be a little bearish if the RSI is high? Anything above, roughly 50 above 60 is pretty high for an RSI. Anything below 40 is kind of low. But the point is like, okay, this is where we were at. The RSI was high, 72, and then it crossed. Or 70, 71. And then it crossed. And we're seeing a momentum shift happen. We're going to start seeing a lot more red selling candles. The volume over here is also an important thing that paints part of the picture. But that's my best speculation. And right now, we're timing like a few days, a few weeks. It's like, dude, like, again, it doesn't take like a fucking genius to just look at this and say, okay, when the lines get closer, that's the time to sell. When the moving averages are farther apart, that's the time to be buying. Because everyone looks smart in a bull run. Like, you don't have to be smart to trade in a bull run at all. Like, you could literally pick the top 100 coins and just fucking throw 1,000 in each, and like, you're gonna make a fuckload of money. That's not smart at all. That's not like impressive at all, right? There's no intelligence behind that. But like, again, and even if we're in the 2013 market, we saw these lines cross and then they uncrossed and there was some space. So it's like, that's the time to invest. I don't see why that's not a bulletproof or at least a solid speculation. Now, there is one thing. Okay, so those are kind of the 5 points: the pi cycle top, the Bitcoin dominance, the Ethereum price, the crypto market cap, and then also the RSI/MACD. Those are the 5 points why I'm like super fucking bearish right now and like not a fucking, faithful user of the crypto or the Bitcoin stuff. Now, I do want to just briefly, before I conclude everything, I guess this might as well be the conclusion, but I do want to talk about the other side because, I've spread enough hate by now, but I do want to talk about the other side. Like, there is a case for the other side to why this isn't, the top of this market. It's, one is obviously hyperinflation. We all saw how much the Fed was printing money, and that doesn't do good for the US dollar. And right now, the US dollar is going to be fighting over the next 4 or 5 years to remain as the standard. I doubt it will be, to be honest. I doubt it will be. So that gives me, that gives me confidence in the entire crypto world as a whole, because we're at $2 trillion and the M1 money supply is like, I don't know, $250 trillion, or at least $250 trillion. And M1 money is just credit and like cash and things like that. But yeah, so we're the entire crypto world, it doesn't matter if you just keep your money in here for 5 to 10 years, you're going to be fine, but I'm just trying to optimize my money and my decisions from a trading standpoint, or from an investment standpoint rather. But that's kind of the other side of things. Again, here's another other side point, or another chart point, is we see these lines uncross here as well. So although the pi cycle top was indicated, it also uncrossed within a week or less, where we see the green go right back above the orange. And if we just observe any part of the market, if you invest when the green's above the orange, you're going to do well. If you just hold for a little bit, every time the green's above the orange, that's when you want to be buying, pretty much. Green above orange is when you hold and buy, and when the lines get closer is when you sell and cash out. I think that remains true for pretty much all coins. You guys want to use this for like pretty much all coins, like, because Chainlink, Litecoin, all these other coins, there's going to be maybe a few that blow up, but it's like they're all going to follow more or less what Bitcoin does, because Bitcoin it's the daddy, bro. It's the king. It's the fucking dominant coin. It is what it is. So hopefully this has been more than informative enough for the fellas, man, that it's like, man, I hope we all make good trading decisions and make money. And like I said, I really hope it's the 2013 market, so we can all be rich as fuck coming December or like November or so. But if it is the 2013 market, please listen to me, fellas. Like, when there is another pi cycle top indicated, like, get the fuck out. Especially if there's a second one, like, get the fuck out, take your money and just hold it for the next year and then put it back. Like, please listen to that at least. I hope I'm wrong about this first top. I hope it's just kind of a local top and not the market top. Again, I think it is for said reasons, because of the Fed printing money, because crypto is probably going to blow up as an asset class. But here's kind of a honorable mention why I feel like this market's overextended, and that's because of the Shiba coin and the Doge and all these fucking shit coins. When you think about venture capitalists and serious investors who are dumping hundreds of millions of dollars into assets and billions, if not, they do not want to fucking invest in meme coins and things that have that type of stigma around them. That's not good for the entire crypto space. It's really not. Dogecoin might be good because it could be like the dollar replacement, because it's a deflationary coin, but outside of that, a lot of these other shit coins are not a they're not a good case for the entire crypto market. So there's kind of 5 or 6 points to why I think that the market's overextended, and why I'm taking the decisions I am. Now, with that being said, obviously your decisions are your decisions. Like, I could absolutely be wrong, put an asterisk next to everything I said. But that's why I'm making the decisions I'm making. And as a final personal point, I've even put, I freaking transferred I had so much credit in Gemini. I had so much money in there because I had sold everything right the other day, and from a few other exchanges too. I transferred it over to Gemini to sell, and I had transferred that money into Bitcoin because I wanted to transfer the Bitcoin over to BlockFi and then transfer that to GUSD. And in process of doing that, I accidentally bought a shitload of Bitcoin with my money in my bank and not the money on Gemini, not the credit that I had used, the USDC or their equivalent. And right now they have frozen my account. So I, out of everybody, am feeling this Bitcoin dip pretty fucking shittily. Like, it's not something I want to be a part of right now. It's not. And Gemini has frozen my account, so I can't move my fucking Bitcoin. I can't even sell the position. I've literally emailed them like, this is fucked up. Like, you need to let people at least sell because I was trying to sell all day this morning. Like, and I've been emailing them like crazy. So I'm telling you guys, like, I don't want this to happen. I want Bitcoin to still take off because right now I'm watching my money take a 5% L right now for no reason. It doesn't need to. That's bullshit. Like, I'm not stoked on that. Like, I think that's a fucking serious flaw in Gemini. Like, me personally, I mean, it's a silly mistake on my part as well, but it's like, I'm telling you from a personal standpoint, I don't want this dip to happen. I really don't. But my mind is putting 4 or 5 things together that kind of paints a solid picture to me. That's like, well, if I had to bet the farm on something, what would I do? Would I be buying right now or selling or holding? Like, what would be kind of the best decision? And that's why I'm making the decisions I'm making right now. So hopefully this has been informative, but again, I encourage you guys to make your decisions personally, and like, your money is your money. Do not take this as real serious financial advice. I'm just a kid with a backwards hat, and so anyway, love you fellas.